It is a huge, huge honor for me to be podcast interviewing my buddy for decades, Wesley Read. Wes is a CPA, certified financial planner, and founder and CEO of Practice CFO and Practice Orbit. He began his career at Ernst Young before dedicating his work exclusively to helping dental practice owners gain the kind of financial clarity and leadership typically reserved for large corporations. Wes and his team act as a true CFO, Chief Financial Officer for dentists, integrating accounting, tax, payroll, and financial planning to help doctors improve performance, reduce stress, and accelerate financial independence. He's also the host of the Dental Boardroom podcast and the Dental Practice Sales podcast. And the one thing I got to, before I welcome him to talk, just real quick for the dentist is like, nothing drives me crazy more than when you sign contracts that didn't have a lawyer read them, or you picked your lawyer because he goes to your same church or ward or temple or what have you. And it's like, dude, you're a dentist. There's 12 specialties. You don't get a CPA who has 40 clients and two of them are dentists. You get a CPA that only does dentists. You get a lawyer that only does dentists. And you just got to specialize. And man, there's just elite dentists out there crushing it, and they never sign anything without a lawyer who only does dentistry, and their CPA is only does dentistry, and that's how they get to the top. Welcome, Wes. Thanks for coming on the podcast today.
Thanks, Howard. Always an honor.
So I would say that in the decades we've been in dentistry, the biggest, hottest new thing that hit the whole world was ChatGPT and AI a couple of years ago. I remember learning about it when I was at Creighton in 1980. That they in 1950 somebody at IBM was doing this, and they were telling us that this was going to be a thing someday, and that was 1980. That was 46 years ago. And then 2 years ago, ChatGPT broke out. Now the whole world is woke to AI. Before you start talking about all your AI stuff, just for my homies, explain the difference between Practice CFO and Practice Orbit.
Sure. These are two companies I have, two separate tax IDs. Practice CFO is a services company that provides what we call fractional CFO work, which is outsourced chief financial officer work for dental practice owners. As you know, all big corporations, all public companies, they all have the number two, which is the CFO to support the CEO. And even though a dentist is not a large corporation, they are generally a corporation. Now they're an S corporation, or if there's multiple doctors, they may be a partnership, but they have the same sort of ecosystem of issues. Even though they're on a different scale, they still have financials they got to do, tax returns, budgeting. They need to deal with their debt. They've got a lease. They've got employee and HR issues. They have this entire ecosystem of issues financially, many of which are vying for their dollar. Everyone wants the dentist dollar. Everybody. There's a lot of vendors, employees. Everybody does. And so what we try to do is say, hey, I know you can't afford a $300,000 CFO, kind of like a bigger organization. And so at a fraction of the cost, we can give you fractional CFO services to help you get the same sort of strategic thinking as a strategic thinking partner. That's one of the ways I love to describe our relationship to our doctors, is that we are a thinking partner with them, both in their practice finances and in their personal finances. And then we set up the infrastructure financially around their bank accounts, their payroll, their accounting, their tax, all of that to create good financial x-rays to then sit down 3 or 4 times a year, do a cash flow forecast, and make really good, smart decisions around the traffic controlling of their dollar to ultimately grow their personal net worth as much as we possibly can every year.
And then Practice Orbit.
Practice Orbit is a technology company. So Practice CFO services CPA plus financial planning merged together exclusively for dentists. Practice Orbit is a tech company that is sort of like a Redfin or a Zillow, except for the buying and selling of dental practices. But it's a little bit different in that it's also a deal platform for brokers to be able to put their listings on there. And I'm essentially trying to create what is the equivalent of an MLS, the multiple listing services in real estate, which feeds Redfin and Zillow as one consolidated place for supply and demand of homes, Practice Orbit, its intent is to become that for the dental practice space and to help brokers navigate the sale from beginning all the way through escrow and closing. And it really has just launched in its newest iteration. And we're now giving demos to brokers and to others out there in order to use it to put their listings. It's free for brokers to use, and then we support doctors through the process.
And Ernst and Young, that isn't that like the big four accounting firms?
Yep. It's one of the big four accounting firms. You have Deloitte, Ernst Young, Pricewaterhouse, and KPMG. They're the big four. And then there's a huge sort of cliff into the next biggest accounting firm. And so when I came out of BYU, I got a master's in accounting. And then I went to work for Ernst Young for a few years. Realized I didn't like the big corporate world, and I really wanted to get into something more personal. And that's when I got into personal finance. And I eventually started Practice CFO, which is finance and accounting sort of integrated into one for dentists.
Well, that is amazing, though, that a dentist can get somebody from the major leagues that was playing with the S&P 500 to come down to little dental world and give them, NFL advice when they're not even college level. They're down in the high school level of businesses. I mean, they're small. But before we get onto that, we get into AI, I also want to say about these practice workers. I know I'm 63, and 63-year-old people spend their whole life telling you how great it was 40 years ago, and some things I just think got a lot better, and some things got a lot worse. And I think in the selling of the practices, what got worse is when I was young, dentists would realize they had ethics. And they're like, this is my baby. I built this for 40 years. These patients are all trusting my hands. I want to make sure I get a really good dentist, and I'm interviewing dentists to take my baby. I mean, it's like giving up a child for adoption. And they would always find the best dentist, and then they would always carry half. And in economics, incentives matter. And the kid say you're going to buy a practice for $2, the dentist would go get a loan for $1, and the dentist would carry the other dollar for 10 years at 10%, which is better than a bond fund. And it was a great three-way play, because first the dentist would sell the practice and he'd get $1 for that. And then at the end of the dentist paid that off, then they always wanted to come back and buy the land and building. And now you got a captive tenant. I mean, how are you going to negotiate with me? You're going to pack all this shit up and leave, and the brand and all that. So then they sell the building, which usually was about the same as the practice in the first place. So then they got another 10-year income stream. And it was just a great deal. And now I see the only dental bankruptcy I see is some dentists will sell to the rolls it over to Bank of America, and he puts a price at real high, and then Bank of America does the financing, and then he leaves Phoenix and goes and retires in Florida. And this kid bought a practice, and he's underqualified, or he doesn't have a mentor. He doesn't have someone that can say, man, you did this implant on this lady and she's all mad, and he can come down and talk to her. Or they lose their mentor, and they're just selling to the highest bidder. That's why a lot of them are selling to DSOs. And not only are they not mentoring the selling dentist, they're selling to a DSO where the damn CEO is not even a dentist. I mean, remember what happened to Boeing when, they were in headquarters in Seattle, and they always had the greatest aeronautical engineer was always the CEO, and the young kids that come out of school could not believe they were working for the man. And then Wall Street says, screw all that. Let's move the headquarters to Washington, D.C. Let's bring in an MBA. That's where all the money is. And within 3 years, their planes are falling out of the sky. They lost a gazillion billion dollars of market value, and they're still upside down because the CEO, and 45 states passed laws that you can't own a dental office without being a dentist. But everybody's getting around it because I guess everybody's decided that. Look at dental insurance companies. When I got out in '87, everybody on the Delta Dental Board of Arizona was a dentist or a specialist that you'd send your mom to. I mean, just great people. Then they decided, well, we need to get rid of all that and let's bring in people that represent the patient. Well, great. When you got a toothache, go have a patient treat you. I mean, they're more on your level. I mean, I think I want dentist focus. I want my CPA to only do dentistry. I want my lawyer to only do dentistry. I want chain dentistry to be ran by dentists. I'm just old that way. But now that AI is woke, I mean, it's now that it's my God, the Mag 7 investment in AI and data centers is completely off the charts. How is AI going to affect your practice CFO and practice orbit? Where are you taking your AI software engineers first, and where do you see it going?
Yeah, let me actually make a quick comment about the kind of the consolidation of in the DSO space and private equity uh, getting into the space. I have a lot of strong feelings about this. I would say 9 out of 10 deals that I look at when a DSO is offering or making a pitch to buy a practice, it's actually a terrible decision for the doctor economically. When you do a cash flow projection and then you discount back to today, what if you didn't sell to the DSO and you just keep running it for the 5 years that they're requiring you to stay on versus if you did sell? And the economics always come down to one simple thing pretty much. Will the rollover equity in the DSO translate into something meaningful? And most of the time, I don't see it translating into meaningful things. Just a lot of promises about equity events, things like that, and it doesn't happen. I've seen a couple that did work out, especially for doctors who got in early. They were the first sort of 10 to 20 practices. But economically, it's just generally not a good outcome for dentists. And there's a lot of smoke and mirrors, and there's a lot of wealth that's accreting to private equity and who I call the suits at the expense of the doctor. So I actually have some pretty passionate feelings about this because I've done an analysis on hundreds of DSO sales, and there's a lot of people making money on these things other than the dentist. A lot of people making money on those. Okay, but that's my, that could be a
Well,
podcast for another day if you want to, but
can I just think what you're answering me. I got an MBA. I just think that answer was 30,000 feet. Can you just give another answer for our biggest viewerships are under 30. They're still in dental school or they just got out of school. But can you just answer that again? She just graduated from Midwestern Dental School last year. No, no, no. Explain that to her again.
sure. So she comes out, she's probably got $600,000 in student loans. She has a negative net worth. And she's approaching the marketplace and the world out there, probably feeling a bit intimidated. A lot of debt, a lot of good training clinically, virtually no training from a business management standpoint. And this is something I feel very frustrated about with dental boards of the different states is they don't give CE for running your dental practice. And so I'm often not invited in to things because of that. For like AAOMS, for example, they've rejected me 7 straight years, and I look at their lineup, and they're almost all clinical, and they have a couple sort of business people on there, but they're like selling straight up insurance, and I'm like whole life cash value insurance, and I'm like, that's not what dentists need. That's not what they need to understand what it means to run a business, a small business. And so that's really frustrating me. So going back to her though, it's a bit of an uphill battle because of that. They have to be very intentional about going out and seeking good business advice, business leadership. What does it mean to be a stockholder of an S corporation? What are the taxes on that? What's the relationship between my business accounts and my personal accounts? And how do I set up a system that really flows my money effectively through this thing? And how do I stay compliant with all of the laws? And that's one thing we help doctors do is essentially set up that infrastructure. So the way I think that she could do it coming out is it's very common and in my opinion, totally okay to go cut your teeth at a corporate dental office. In fact, I think that's actually a great use of your first few years. A lot of people in the chair, a lot of clinical experience. You're probably going to be encouraged to upsell sometimes, depending on which sort of institutional organization you're with, but you still get a ton of experience. Once you can almost do dentistry with your eyes closed, you've got that down really well. I just want to emphasize to this new doctor coming out of school, you will make more money if you own your own dental practice than if you're employed by a larger corporation. And I know it can feel daunting because you're the owner of it and it's all on you. However, it's really exciting though. It's really exciting. The main thing is you have to be intentional about being a leader of a small business. And that's a curriculum that you just have to seek out. And so I have my Associates on Fire.com website, which has a lot of educational resources. And for our clients who hire us and we help them through the purchase of their practice, we then set up that what I call CFO system and provide a lot of education and support for them to do it. But I just think that they kind of need that today. A CPA specialist who isn't just filing a tax return and a P&L, who they meet with 3 to 4 times a year, and they're looking out into the future, and they're making really important finance decisions around their business. And there's only a handful of firms out there that have this sort of CFO model to do that. And I think with that, they can be successful. Now, there's a lot of incredible winners out there, I call them. They will find their way to success. They are motivated and they are gritty, and they will find their way to success with or without a firm like Practice CFO. But I would say your average dentist just really needs some hand-holding throughout that process. And I really encourage that doctor for her to seek after personal ownership. It'll be in her best interest to do so.
And you know what they always say to me, those young dentists out of school? Oh, well, my mom's sister, she does taxes free for the whole family. I'm going to use her. Oh, my God. If I
Well,
had
you're
you here,
hitting
I'd pull.
Yeah, you're hitting on an important subject that all business owners, including myself, had to learn, and I'm still learning this, which is what is the difference between something that is just a commodity of a cost that I should just be purely focused on cost, and what is something that is more of an investment whose outcome is contingent upon the quality of that thing that I'm paying for. And so I think when it comes to coaching, when I think it comes to a CFO advisor or a CPA, or different, especially service providers, you kind of get what you pay for. And I am able to show these doctors, yeah, it costs more than the bookkeeper down the street for sure, because you're getting a CFO. You're not getting just a bookkeeper or even just a CPA. You're getting a CFO. And it's so easy, especially in states like California, where you have a 9.3% marginal tax rate. It's so easy for us to create a system where our doctors are way better off, even after paying our fee, than going with a less expensive option because of the amount of tax savings we can create just in that alone from good cash flow planning for our doctors.
And I'm actually, I think the 9% California state income tax you pay is actually a great investment because I see what they did with $100 billion for that high-speed train. And that is just amazing how they've spent $100 billion and they still haven't built 1 mile of
I
track.
know
And
it's like
how do
20 years
you
in the making.
how do you spend $100 billion? I mean, China would have built it around China 4 times in that amount of time. But anyway, so how is AI gonna land in dentistry? How's it gonna help my homie running a dental office?
So right now, everyone is trying to understand what is the reality of AI. And there's AI, there's the large language models like Claude, ChatGPT, Grok. There's the large language models, which are these sort of huge buckets of data that people then will insert a prompt into, and it will go in that huge bucket of data and give these phenomenal responses back. And a lot of people, and especially the younger generation, they're becoming phenomenal data retrieving machines. And that's what AI is. It's helping us all be really effective data retrieving machines. It doesn't necessarily make us be better at critical thought, at independent thinking, at brainstorming and creativity, but it does help us become much more informed very quickly. Then, in addition to the LLMs, you have the application layer. And the application layer is then using those LLMs to create a software or something that does a specific task. In dentistry, you have Overjet, you have Pearl, you have some of these big names popping up, and some of them will provide a software that uses the LLMs to for example, evaluate a radiograph, and it's like 1,000 dentists all brainstorming around a given radiograph, and that's very valuable. But these application layers are popping up everywhere, from small little application layers to sort of process-driven applications in a manufacturing business. And every demo that I do of an AI company, I'm impressed with it, but it's not yet saving me time. It may automate 50% of it, but the other 50% is still very manual, or it doesn't fit exactly what I need. And so I think if you fast forward 3 to 5 years, you're going to see much more of a crystallizing of what these things can do for actual businesses. And there's a lot of stuff coming out that's selling just because it's got the word AI on the website and it lures people in. But there's still a lot, I think, that needs to be discovered here. Uh, in my space, there are how is AI affecting tax, accounting, financial planning? And I'll just talk about that for a minute. So the dentist can ask themselves, is my CPA, is my financial advisor using AI, or how are they using AI? Well, QuickBooks is introducing AI into it to give a financial sort of analysis of a P&L. It's just starting to have some features like that. Tax, our new tax software, our clients will drop all their tax documents like 1098s, charitable statements, W-2s, K-1s, things like that. They can drag and drop these tax documents as either one document or multiple PDFs into our what's called our tax organizer and questionnaire that our clients all need to sort of fill out every year. They just drag and drop it in there, and it will automatically break up all those PDFs and put them in the right sort of bucket, which we can then use to bring in and feed our tax software. So it used to take a lot of time in parsing out different PDFs, organizing the file structures, naming conventions. Now that can all be done in seconds with AI. And there's new AI softwares, one called Digits, for example, coming out that's trying to compete with QuickBooks as an built from the ground up AI-based software. And it's close, it's good, but it's not going to save me more time than QuickBooks right now yet. And that's why I say a lot of them are good, but not great. Go ahead.
Quick question they always ask, are you talking about QuickBooks or QuickBooks Pro?
I'm talking about QuickBooks Online, which is where most doctors are. You got QuickBooks Online and you have QuickBooks Enterprise, but I'm talking about their basic uh,
So
version.
QuickBooks Pro is a desktop version and QuickBooks Online is just QuickBooks Online.
Yeah, I think so.
Okay, okay.
QuickBooks Desktop is pretty at this point archaic. There are a few dentists still with desktop, but yeah, most people are in QuickBooks Online now, and they've now decommissioned the desktop. They don't do updates for it anymore, and there's certainly not going to be any AI uh, uh, in the desktop version. It's all going to be in online.
And does it, a lot of dentists they bank with their, especially in rural, the little rural local bank up the street. Do the major banks, like if you're with Chase or Bank of America, does that merge with QuickBooks and make it easier for your end and all that kind of stuff, as opposed to a little private bank up the street from you?
Yeah, and you're bringing up a really important logistical issue with CPAs working with dentists. It's a please don't be with a CPA that is okay with you sending paper bank statements every month. You're not going to get your financial statements for sometimes months after the end of the month. And it's going to be really rudimentary. It's going to take you a bunch of time. No, doctor, if any doctor's listening to me who doesn't have an automated feed from their bank account into QuickBooks, they need to get that fixed. That is just a terrible inefficiency. So, but yes, most rural banks or small banks, they use a third-party banking platform because they don't have the money to develop their own. And yes, those third-party banking platforms will plug into QuickBooks. And of course, all the big ones like Bank of America, US Bank, Wells Fargo, they all have an automated feed into QuickBooks. Now, one thing that's really emerging in this space of tech and AI are, speaking of the software layer, there are quote unquote credit card companies and banking companies that are really technology companies layered on top of a traditional bank. And there's a main bank out there called Thread Bank that has essentially opened up their banking to software developers. And what I use at Practice CFO, for example, I use a credit card called Ramp. And there's others out there called Divvy or Mercury. There's a handful of these. Relay is one for checking accounts. But what they are is you log in and it's got so many more banking features and control features around your finances that enables you to set up these systems much more effectively. For example, with one of my big clients, he has a Divvy account. And in Divvy, when you log into Divvy, it's like a credit card, except it's a little different. You have to pay it back at the end of the month. In that regards, it's like a charge card. You have to pay it back. But when you log into Divvy, you set up all of your vendors and you can set up a separate virtual credit card for every vendor and put a limit on it. And I do this at Practice CFO. Every vendor has a virtual card and I have a limit based on how much I know I pay them. And there have been many times where the vendor will try to charge above that limit because they made a mistake or they're slipping in an upcharge and it catches them. And then every card is attached to a given GL code in QuickBooks Online and it automatically feeds over so we can try to automate some of that process. And so at my company, I have various people who have their own card with controls on it. I have a virtual card on my phone, and then it has AI features in there to analyze the financial data about your vendors and your spending and things like that. And so I love these tech-driven, AI-driven credit card and checking account banking platforms that are software companies layered on a bank. The challenge is most dentists are forced to use the bank that lent them the money to buy a practice. And so they're forced to use Bank of America or they're forced to use US Bank. And frankly, I don't like their platforms. They break all the time. And we said, say, doctor, will you log into Bank of America and get us online access again so we can do your accounting? It's one of the biggest logistical pains in the butt.
I agree. That's why for 25 years, everyone in our office calls Bank of America Skank of America. But we switched to Chase, and we don't have hardly any of those issues. I think Jamie Dimon runs a class act. Now we still have to use, Bank of America for some things or whatever.
And Bank of America
But
does really good loans. They do really good healthcare loans. And so a lot of people use them for
but
that.
their statements, there's their digital platform, their statements, they don't have. I mean, it's kind of like going from Apple to a flip phone. I mean, and Apple's Chase.
If I were to start a dental practice today, I would be using Ramp for my credit card and I would be using Relay Fi for my checking account. And I use both those for Practice Orbit and one of them for Practice CFO, but those would be my preferred banking platforms.
Okay, I can't take notes fast enough in this deal. Can you email me that after the show?
Sure. Relay
Um,
Fi and Ramp.
I feel bad taking notes during your show because I don't want you looking at me thinking I'm texting my mom or something. I'm actually taking notes. But after the pandemic, I mean, you've been in this game a long time. Even the old dogs that I know that always had 50% overhead, they lost 50% overhead. I mean, even some of the legends like Rick Kirshner with Mean and Lean Comfort Dental, who wrote all the books and tapes. He's like, man, labor's killing me. 20% of the hygienists dropped out, and so their labor's gone up and their dental supplies have gone up. So when you're a CFO and somebody said, "Man, my dental supplies used to be this much, now they're that much," and my God, labor. I mean, you just routinely see dentists who have labor over 30%. I mean, it's like, I cannot, Wes, I can't tell you how many dentists I know that have labor 30%, 32%. I mean, back in the 80s, it was like, well, your overhead's 50%, your labor's 20%. It was just like, duh, that's what you do. Now overhead is like 65, 70 plus, labor's gone from 20 to probably 30 for 20%. Are you seeing that, or am I just hanging out with a bunch of bozos?
Oh, 100%. Cost creep has been going on for 15, 20 years, I feel like, in dental. That said, let me share a few thoughts on this. I think the bigger problem that most private practice owners have is a top line problem. They're not getting enough output out of their resources. Resources being their team, their office, their equipment. They're not getting enough output. They're not getting enough patients in the door, not getting enough patients to accept treatment plans. They're not collecting well enough. They're just not getting enough output to justify their cost structure. And a lot of times it's not that they're overpaying in all their vendors, it's just that they're not getting enough collections from what they have to work with. And when you're all in with the PPOs, there's very limited there's very limited effect you can have on your collections when you're all in PPOs. Now you can sell more treatments, you can do more treatments in one visit, you can get a CAD cam so it's same day dentistry. There's a lot of things you can try to do to be successful in the PPOs, and I do have a lot of clients who are pretty successful largely in the PPO model, but you have to be a well-oiled machine. If you want to be taking home, let's say 500,000 pre-tax as a dentist in a PPO office, most of my clients who are above that are largely fee-for-service doctors. But that all comes around to branding. But let me talk about the labor and the supplies. I've always found that supplies, a lot of companies are willing to negotiate supplies because there's a lot of suppliers out there, and they're willing to sort of meet others' pricings, and there's of course purchasing groups and all of that kind of thing. This is one area where the DSO has some advantages, is simply scale of order sizes, and so they can negotiate discounts. But I think some shopping around goes a long way. And when it comes to labor, it's I have a theme at Practice CFO, which is I call it ABI, which is always be interviewing. Always be interviewing. Always have an ad out there for hygiene. Always have an ad out for hygienist or front office. And you can tell your team, it's not that any of you are at risk of losing your job, but just know hiring is always difficult. And a year from now, some of you may have moved away. You may not be here. And so I'm always have an ad out running. I always do. And for example, I'm probably once a month taking a quick 20-minute interview. And I have a list of potential new CFO advisors, new accountants, new tax people that I'm always sort of nurturing because I believe the single most important thing that a business owner can do is to manage their roster. That's their team. And if you get all A players, the difference between a business with A players versus a business with B players, it's like twice to three times the take-home profit. A players just make your life easier. They identify problems on their own, and then they solve those problems and just report it back to you instead of either missing problems or coming to you to solve all the problems. A good B player will find problems, but they have to come to you to solve problems. An A player, it's just so important to do that. So always be interviewing. And then the other thing is there's a lot of talent that people have. There's a lot of talent that people have that you simply have to figure out how to extract it out of them. And that's where good leadership comes in, motivating skills, coaching skills, doing your huddles in the morning, pep talks, giving people inspiration, why to come in. It's not just about fixing teeth. It's about people's health, and it's about impacting people's lives, helping people feel impact. I've always said happiness is downstream of impact. Help your team feel like they're making an impact on people's lives. And you'll just have this great culture, and people love to work in a culture that they feel strong about. They love that. And it's non-quantifiable monetarily, and yet it's so valuable. Anyway, so just a few thoughts on those two things.
I just want to just simplify this, explain it to me like I'm five, just to the kids in dental school, is that what he's saying is that if all your overhead costs $1 a year for your staff and supplies and all that, and you produce $1 for the dentistry, your overhead's 100%. But if you took that same staff and learned how to produce $2, your overhead's 50%. And again, you look at the NFL. I mean, the Denver Broncos all-star quarterback broke his foot, and the backup quarterback, he's been saying forever that he's going to be the best. I actually hope he wins the game just to let him have his moment. But back to supplies, always shopping around. What did you think, being from, you used to play with the big boys in Ernst Young, but Patterson went private. They delisted and went private. Shine, they just brought in the KKR, which owns Heartland. They just bought a big chunk of Shine, and they got some board seats. And when Stanley Bergman retired, I was just shocked that somebody, I mean, I know all the guys under Stanley that, been there 30 years. I mean, they have legends. They actually brought in an outside person, which kind of tells me that they got new money in there. Patterson got delisted. They're basically telling the company, boys, we're going to have to make a right-hand turn at this next intersection up here. And but what do you and you say shop around? So any names on where you shop around? I mean, Benco's still the biggest top three that's totally private with Chuck and Rick Cohen. But when you say shop around, what are you usually talking about?
Yeah, I would say getting different quotes, and I'll say that I don't get too deep into kind of conversations with the suppliers, but they all have their formularies, and that's like their own UCR in a way. That's their own fee schedule, and you can get that. But I feel like they do a lot of price matching, and I also feel like there's a lot of group ordering. Uh, there are some group ordering that becomes somewhat like a PEO, which is almost you're almost grouping your practice with other practice, almost like institutional DSO, but it's not, in order to all get lower supplies. And there's some pros and cons with those things. But yeah, I would just say shop around, but some people also find a lot of value. Like here in San Diego, Patterson is really involved in the relationships. They still go see the doctor. And a lot of doctors find a lot of value in the relationships with their suppliers. And you have some really good, just thoughtful, I think, people with good integrity in these dental offices, and the doctor's probably gonna pay a little bit more for that type of relationship. But the way I've always looked at these things is, I don't mind if I have to overspend a little bit in one area if it frees me up to go make bigger money in other areas. And that's what a personal supplier, I think, could do for you. And then, of course, there's just online commodity shopping. You train your front office to do that stuff, restocking the supplies, and you're all about just the pure cost of things. I think using online group purchasing or just shopping around is probably going to be your best bet.
Did you ever meet Pete Frechette, the founder of the guy who took Patterson public and ran it
Mm-mm.
basically most of my career? They're in Minneapolis, St. Paul, and my oldest sister, her is a Catholic nun, her convent's in Minneapolis, St. Paul. So I'd have to go do business for 4 hours and 1 minute to make it a business trip to go see my sister. So I'd always fly to Minneapolis, and Pete would let me sit with him for 4 hours and 1 minute, at his desk and watching Patterson. I mean, that guy taught me so much. But if he was too busy, I'd just go to the R&D department at 3M. Yeah. But what I would do also, if I was a kid got out of school, I'd make a relationship. Like if you know you want to live in Phoenix, Arizona, you should be going down to the big brokerage house, Patterson, Shine, Benco, and getting a mentor to sit there and tell them, I want to buy, I want to work for someone for 2 or 3 years who's looking for an associate. Do that relationship base. The relationship. What I like most about my rep for years, with if I ask them a endo question, like I'd say, well, what do you think of these new endo files? She'd always be able to tell me, well, I know you idolize Jason Hale, and he uses these Tulsa dental product files, blah, blah, blah. And then on the implant deals, when I was getting my fellowship at the implant deals, every time I had I didn't want to buy them online. I wanted to buy my implants from an implant rep. But the reason I use my implant company is because whenever I called him with a question, and I'd leave the message on his voicemail, I have a question about something. He always called back and says, okay, I know you get off work at 5, and Dr. So-and-so gets off of work at 6, and so-and-so gets off at 7. So at 7 o'clock, we're all meeting at Macayo's Mexican restaurant, and we got a table going, and it's gonna be this oral surgeon, this periodontist, this dentist that's placed a gazillion implants, this dentist that's placed, and so he was always the social maitre d', and then you'd be sitting there with 3 or 4 guys. I always told them, when we go to dinner, I want to be the dumbest guy in the room. I always want to be the dumbest guy in the room. And I'd go to there, and man, I'd have this problem that I thought was this big, and I'd have guys do it all on four, telling me how ridiculously simple this was. And oh my God, so networks, relationships, that's just that's everything. I want to tell you,
I
ask you
couldn't
another
agree with
thing
you more on
again.
that, by the way. I couldn't agree with you more on that. I always underestimated the value of networking and meeting people. I recently just joined the Vistage group, which is kind of business owners coming together once a month and talking about their needs and issues. And I'm already meeting people that are providing incredible value for me to take home and think about. So just want to endorse what you're saying there.
I also want you to again. all the emails and all the direct messages, almost all the feedback I get on my podcast, again, they're in dental school or they just got out the first 5 years, and that's why I continue to do this show for them because of but one of the problems they get is the older dentists are always doing something illegal, and they hire them, and they come out of school and they hire them as a not as an employee, but
Independent contractor?
as an independent contractor. And then that person, they just got a dental school where they used to be working at Starbucks for $15 an hour. Now they got these big paychecks. They're going and buying all this stuff. Then they get their tax bill and they just about crap their pants and they have no idea why they owe Uncle Sam. So they're not doing quarterly, but the independent contractor, it's illegal. I mean, it's illegal, it's illegal, it's illegal. And they're just going to ask you when you go to the IRS, so they're going to say, "Oh, well, was it your office? No. Did you set the hours? No. Did you buy all the equipment? No. Did you hire all the staff? No. What did you do? Oh, I went in that building and I worked and I got paid." Yeah, you're an employee. And I can give you the names of two dentists just from my town of Phoenix who basically almost went bankrupt because they had an associate working for them for 10 years that wasn't paying their taxes, just flat out wasn't paying it. And then when the IRS got onto them, had this big judgment with penalties and fines, and then made the dentist pay for it. So here's this debt-free dentist, student loans paid off, house paid off, has to go get a big mortgage on his house to pay off an IRS deal of an associate. So can you just talk to the and then overall just roll it into why does all the dentists I know live paycheck to paycheck? Why are they always living paycheck to paycheck? How come when April 15th is, Super Bowl's, in 3 weeks, and then the next nightmare is going to be April 15th, and what percent of the dentists cannot just write a check to the IRS? Why are they living paycheck to paycheck? Why can they not pay tax? Why is April 15th the worst day in dentistry? Ken, I know that's a lot of questions to throw at you, but you know where I'm going.
Yeah, I definitely do. And for all your younger doctors, I encourage them to check out associatesonfire.com, which I created a green screen room here in my office. We called it Marvel Studio, and I did videos of me explaining what does it mean to be an independent contractor? What are the rules around an independent contractor? How do you plan for your taxes and reducing those taxes and not having surprises on April 15th? How do you deal with your student loans? How do you approach the purchase of a practice? All that stuff. When do you buy your house relative to your practice? When do you start funding a 401k or your IRA account or paying off your student loans first? All of that stuff I address in associatesonfire.com, which is totally free for dental associates. But let me share a few thoughts on this. I think that to step back and say, why do practice owners generally want their associates to be independent contractors as opposed to W-2s is because W-2 employees, the owning doctor has to pay half of their FICA taxes, which is 7.65% of whatever they're paying them if they're a W-2.
That's your Social Security.
Social Security and Medicare. That's right. Social Security is 6.2%. Medicare is 1.45%. And that's 7.65% total for the employee and then 7.65% for the employer for a total of 15.3%. If you are if you're an employee of mine, Howard, then if you're an employee of mine, I have to pay for half of your FICA taxes. I don't pay your income taxes, but I have to pay half of your FICA taxes. If you're an independent contractor, then you have to pay 100% of your FICA taxes, all 15.3%, not just 7.5% of your W-2. So if your W-2 is $200,000, then the overall FICA taxes are going to be somewhere around $25,000 to $30,000 all in. And I, as the employer, am going to pay half of that. So let's say 15, and you're going to pay 15. If I make you an independent contractor, guess who has to pay all 30,000? You do. That's one reason why owners don't want to W-2 their associates. The second reason why, if you're a W-2 and I have a 401k, guess what? Where I have health benefits, guess what? If you meet the working requirements, you're going to be eligible, and I'm going to have to pay the employer benefits. So all the benefits as well. But you're right. The rules have become more strict around this because what's happening is a lot of time the associate dentist isn't reporting their income. they're not fully reporting their income because oftentimes they're sole proprietors. And sole proprietors, it's really easy to commit tax embezzlement or tax fraud, where you simply don't recognize all of your income. And so they put the tax agencies will put the onus on the employer more than they will the employee in this 1099 W-2 conflict. Um, the other thing I will say, now going to your question, why do dentists live paycheck to paycheck? I mean, this is dental associates and this is practice owners. This is humans in general, I will say. Humans in general, dentists not being exempt from this pattern of human behavior, which is to live paycheck to paycheck. A couple things. When dentists come out of school, I just find that they feel like they've been restraining themselves for so long that they have this pent up consumerism. A lot of their friends who got out of school 4 years ago, 7 years ago, whatever, have now already built enough of their career that they're driving that nicer car or they're a homeowner now. And the doctor's feeling like they need to catch up. And so they come out and they just unleash that pent up desire to buy things. And I always tell them, and this is my first video on Associates on Fire, if you can keep living like a dental student a little bit longer, it's going to create compounded benefits to you in so many ways. You're going to have savings, emergency reserves. You're not going to have credit card debt. You're going to have more cash to buy the type of practice you want. You'll be able to maybe put some money early on in retirement. That's going to compound for a lot longer. It's like Dave Ramsey says, if you ever read Dave Ramsey or Total Money Makeover, if you live like nobody else now, in the future, you'll live like nobody else. And that's true when it comes to these dental associates. So pent up consumerism. Number two, and the reason why so few dentists, I think the ADA says it's like 1 or 2% of dentists can retire at age 65 and maintain their same lifestyle, is because being a business owner, even if you're a sole proprietor, but being an S Corp owner or a partnership owner is complicated. And you've got bank accounts, you've got all this debt, you've got a lease, you've got employees, and you have tax rules. What can you take out of your practice into your personal life? And a lot of times they don't orchestrate the flow of their financial platform to be efficient and to eliminate unnecessary taxes that are being paid. Doctors pay way too much in taxes. I see it all the time. And it's because they don't have a good cash flow system. And I always tell the doctor, tax planning is a subset of cash flow planning. What is cash flow planning? It's taking your historical cash flows from collections and all your overhead and all your debt and all your taxes, and it's forecasting it out 6 to 12 months and doing that a couple times during the year, and then deciding what do you do with your surplus dollar. And assuming you have a surplus dollar, if you don't, your first job is to get your collections up so you can create a surplus dollar. But as soon as you have a surplus dollar, your taxes are starting to go up. If you have a surplus dollar, that means you're probably cash flowing really well. But as soon as you have a surplus dollar, you have to be strategic about what do you do with that dollar. Do you pay down debt? Do you buy equipment? Do you build out an operatory? Do you take it in your personal account? Do you fund a 401k? What do you do with that? And I tell them, you got to think like a bank. Banks have to keep a certain amount in their vault per the Federal Reserve requirements. But anything above that, banks are lending it. That's how they make money, is they're using their surplus dollar. And I tell dentists, think like a bank. As soon as you have that extra dollar, then let's figure out how to use it first to try to reduce their taxes. This is why I love 401ks for a doctor with only 7 or 8 eligible employees. Very low staff cost, 100% tax deductible. It's a beautiful thing. But the other reason I will say that doctors aren't able to sort of retire when they want to, or as I like to call it, become financially independent earlier, is because they oftentimes they make really big mistakes. I mean, I use the analogy of Sisyphus, the Greek who was punished by the Greek gods for being constantly self-deceptive and deceiving others and just dishonest. And he has to roll this boulder up the hill, and he gets it up there only to have it fall back down. And he goes back down, and he has to heave it back up, and he has to do this ad infinitum, forever. That's his punishment. Well, dentists will work extremely hard for, let's say, 10 years. They start to build up some money. They pay down their debt. And then some big things happen. One of them is they get lured into a private investment deal. that their brother-in-law's cousin came and told them about at Thanksgiving. Or, there's this one down in Texas that's kind of this patriotic organization that is just really not done good to a lot of doctors down there. Some early doctors I think were okay, but I've had a number of clients put a lot of money into it and they aren't seeing it come back. And there's a
Drop
lot of
names. Drop names. Or,
I, I all I can say is this. Okay, it's a very patriotic name down in Texas.
right,
Most
right,
doctors are
right.
probably, if they're familiar with it, they're going to know what I'm talking about. And I can't speak for all of their investors, but I can speak for the ones that I've been involved with. It has not produced great results, even
Right.
though
You
it's.
just Google it. You just ask ChatGPT, they'll tell you the same thing.
Yep. I mean, it's Kool-Aid, and I'm all about drinking some Kool-Aid from time to time at conferences. It gets me all motivated, but you got to be really careful about trusting in an investment opportunity that is opaque. They don't let you see your balance at any given moment, and it's not quite clear when you're going to get a return on that. And don't think just because everyone's doing it that it's a good thing, because $80 billion of people's money was lost from Bernie Madoff. I mean, that's a big example, but there's a lot of mini Bernie Madoff situations going on all over the place. And dentists tend to be lured into these because it feels like it's this undiscovered, unique investment that the rest of the world doesn't know about. And all the rest of the world is falling in line with your blue chip index funds, and they're all just going to get the average. And I want to be a dentist who gets better than the average, so I'm going to go with this private deal. So see a lot of doctors lose a lot of money from that. Divorce is always completely disruptive to a doctor's life. I'm not going to say yes or no on a divorce. There's a lot more than the financial aspects, of course, but that's a big setback for a lot of doctors financially. And then a big one is that doctors get sold by their CPA and suppliers to abuse Section 179 depreciation deduction on the equipment that they buy. And if I can park on that just for a quick sec, because this is so pervasive in a dental office. A dental office is this real equipment heavy business. You have a lot of fixed costs. And so they go and they buy, let's say a CAD CAM, and let's say it's $100,000. They're nearing the end of the year. Their CPA says, hey, I did a little tax analysis and you're going to owe $50,000. And the dentist is like, wait, I'm not prepared to pay $50,000 in taxes. And the CPA says, well, are you buying any equipment? Because if you buy and install the equipment by December 31st, we can front load all the deduction of that, let's say $100,000 purchase, and it's going to lower your taxes, and then you're only going to owe $5,000 if you do that. And the supplier comes in, the supplier says, yes, we can get that CAD CAM installed in your practice by December 31st. And yes, you get this magical thing called a Section 179 deduction. And all that is the IRS says if you buy something that gives you benefit over years, like a CAD CAM machine or a dental chair, then you have to deduct it and get the tax benefit over years. In most cases, it's 5 years. And all of us generally would prefer to get a tax deduction today instead of a tax deduction spread out over 5 years because a dollar today is worth more. And so everyone's telling the doctor to go buy that $100,000 machine. So they go and they buy it and they finance it. And they finance it 6 months, no payment. And then it's over the next 5 years, they're going to pay, let's say, $2,500 a month for that new machine. Well, in that year that they bought it, they look great. The taxes were mostly eliminated. The CPA looks like a hero. The dental supplier jumped in the nick of time to save the day. And the dentist is just so pleased with how that all worked out and that now they have a new CAD CAM and all of that. Problem is, go to the next year. Because their taxes were artificially lowered in that first year because they got a $40,000 tax deduction for not paying a single dollar out of pocket for that equipment. But the next year, and then the year after that, they're actually now paying every year $30,000, getting virtually no tax deduction on that $30,000. A little bit for the interest, but not much. And so it's so painful when you have money going out of your business checking account with no tax deduction. That's very, very painful. And so at the end of year two, now it's even worse. Now the CPA says you're going to owe $80,000 this year. But if you want to buy 8 new dental chairs, that will probably eliminate your taxes. So what do? They go and they finance the purchase of 8 new dental chairs, and they look great. Go into the third year, and it's this snowball that I call it's a tax trap. It's a tax spiral. And there have been doctors who filed bankruptcy over not improperly using Section 179 depreciation deductions. And I blame a lot of that, to be honest, on the CPA. And the reason why is the CPA is a historian. All the CPA cares about is historical numbers and how can I lower your taxes right now, here, today. And they're not forecasting out what cash flows are going to look like in the future and then properly setting up a payment plans and tax planning strategies to mitigate taxes in other ways. So depreciation is a big reason why a lot of doctors are living paycheck to paycheck. And lastly, and I'll keep this one short, Howard, I know I'm blabbering a little bit here, but
No, you're
this
awesome. I can listen to you for 40 days and 40 nights.
this is probably the biggest reason, so I'm saving the best for last, is doctors simply don't create a disciplined spending plan in their personal life. And if I ask, I found this over and over. If I ask a doctor, how much do you think you need to land in your personal checking account every month, your personal checking account for you and your family to live? And let's say they'll tell me $10,000, Wes. If I have $10,000 after tax, I can pay my mortgage and do everything. Then when we do their budget, we actually look at their historical spending. They're usually 150 to 200% that number. So that doctor is actually spending more like 15 to 20,000. And the reason why is they will always view their business checking account as this backup ATM. Younger generations may not even know what an ATM is. That's the bank teller. You go up to the bank teller, put in your card, and you pull out money. So many doctors use their business checking account as a backup ATM when their personal checking account is low. So they'll just go and transfer money over. You can literally do it on your phone in seconds. Or if you're old school, you'll write a check from your business to your personal checking account. But there's no method, there's no cadence around how and when to pull money out of the business account into the personal account. And because of that, if this is human nature, if there's cash available somewhere, it's going to get spent. That's the default. If there's cash available somewhere, personal checking account, personal savings account, business checking account, business savings account, even credit card availability that's unused, their credit limit. If there's cash available somewhere, human nature is to spend it, and dentists are very culpable of falling into that element of human nature. So one of the things we do at Practice CFO that I encourage every doctor to do is to sit down, if you're married, sit down with your spouse and look at your historical cash flows. You can export it into an Excel file, whatever. A lot of banking logins will now actually do that automatically for you, and define, what do I actually need to spend? Write it out on a printed budget. Google a budget. It's easy. And let's say that's $15,000 a month. Then deposit $7,500 a month, twice a month from payroll, into your personal checking account. And then you live on that. You don't need to keep receipts. You don't need a quicken budgeting file. You just have to live on that amount and know that you don't go into your business checking account unless there's a really valid, good reason for it. So this is what we do. If you were my client, Howard, and I'd sit down with you and you'd say, Wes, I need $15,000 a month to live. I'd say, great. I'm going to deposit $7,500 twice a month into your personal checking account. And you're going to live on that, right, Howard? And we spit and we shake on that. And then we know that I know what you need to live on. And by virtue of knowing how much you need to live on, I know by extension how much cash is going to stay inside of the practice checking account in order to then make all of my cash flow planning decisions. And that's how you create a really good disciplined system. Couple that with automated savings into your IRA, your 401k, brokerage account, automated extra debt payments, all of that automation. And now you've got this beautiful formula that accelerates financial independence in a meaningful way. And I love to see, I've been doing this now with dentists. I started practicing in 2013, and so many of my early clients had just bought a practice and they had negative net worths. Now, some of them have $4 or $5 million in their accounts. They have some of their student loan paid debt. I don't like to pay off student loan before investing. It's a terrible decision mathematically. But it's been one of the most rewarding experiences for me is to see a doctor live on that disciplined, committed plan and to become financially independent so much earlier in life. It's really a pleasure for us.
Well, I assume you're everything you just said, you were talking to single dentists who weren't married to a wife named Muffy. Um, is,
I,
is
this is
that
why this is why I always try to get the spouse in the room too.
Yeah, that's the best advice because you know what dentists do? They always go home and say, "Oh man, I did 5 crowns today," and the wife knows the crown's $1,000. What she doesn't understand is that it's a PPO, and the first thing they're going to do is adjust off 350. So she's thinking 5 crowns. Well, that's 5,000. I mean, that Gucci purse is only 5,000. I'm coming on. Am I worth one day's 5 crowns? So they have to be involved in the finance. I mean, you get divorced over sex, money. And then when you combine the two and you start paying money for sex, it's even worse. So, so I
Never
want
heard of it that way, but that's good.
I want to. Sorry, before I let you go. I know this is beneath an Ernst Young CFO, but the dentists are always talking about credit card fees. They're always talking about can you charge the patients the credit card fees, credit card processing fees. It just seems to be a reoccurring issue. They're always up in panties about credit card fees. Do you have any thoughts on credit card fees?
Yeah, so credit card fees, I historically I've always said make sure that you're on an interchange cost plus plan and not what's called a surplus plan. Interchange cost plus is whatever the interchange rate is, the Visa, MasterCard, Discover rate. Cost plus is that rate plus a fixed amount above it. Let's say 25 basis points or 0.25% or something like if you can get around there or lower, you're probably pretty good. The default that merchant processors will charge is using what's called a surplus plan. And surplus plan has, depending on the type of card that the patient swipes, sometimes they may be paying 4 to 5% of for merchant processing fees for that particular transaction. And I'm not a fan of those. And most dentists don't know the difference between the surplus option and the interchange cost plus option, but really push the interchange cost plus and a small markup, say 25 basis points or less. And I might be a little rusty on this, but that's historically been my advice. And then what I would do is every month get your merchant processing statement, and on the bottom it says how much they charge you. So they're collecting for you and they're dropping money in your account every day, right? And then once a month, typically once a month, they pull out their merchant processing fee and take that fee and divide it by the total amount processed. It's really easy and it's on the statement. Take the amount that you paid the merchant service provider and divide it by the total amount processed and look at that as a percent. It's usually going to be somewhere around 2.3 up to 4.5%. Anything that starts to get above 2.5%, you should probably start shopping around for a better option. And this is a commodity thing. This is not you get what you pay for. This is purely commodity. The only other thing I'll add to that is some that are dental specialty will integrate with your practice management software. So when the patient swipes the card, it will automatically update the patient record. And there's a convenience there and it reduces manual entry errors, but you're typically going to you get charged 0.5% or more on that. And a little bit that's up to you whether or not they want to do that. But go for the interchange cost plus. There's some coming
Well,
out now where the patient pays. I don't know how I feel about that, but
all I know is that when I go to um, patient, when I go to the finance, I mean credit card. Okay, are you going to charge patient credit card fees? Credit card processing fees revisited. That's 500 people about that. The next is um, credit card chargeback. Questions about credit card, Cherry. Merchant services, credit card processing, very confusing. I mean, it's half the flipping questions on personal finance, patient finance. I mean, so I don't know if you need to write an article for that in Dental Town magazine or get on Dental Town and look at a bunch of those questions and answer them. But it's really annoying deal. But hey, man, I know you're busy. I try to keep these short for an hour, and we've gone past that. You're a legend in my mind. Thank you for all you do. Thank you for coming on the show. It's guys like you who make this podcast amazing. Wes, seriously, thanks a lot for coming on the show. I hope you
thanks.
have a Great
Yeah,
day.
thank you. And I just want to make one final comment too. I had heard about you when I first got into dental back in 2009. So the honor is mine. You're the legend. I'm not the legend. Very few people know me. Everyone knows of you. So this is such an honor for me. And I'll just sort of end by saying for doctors, especially young doctors coming into ownership, it's kind of confusing and hard to find your roster of service providers like a CPA, payroll company, taxes, business financial planning, personal financial planning, all of that stuff. It's kind of hard to find really people that really know dental and put you first as fiduciary advisors and really guide and educate you. It's hard to find that. And I'll say, um, just keep this in mind that most CPAs are just there to give you accounting reports and file a tax returns. They're not going to give you much financial coaching, and don't expect that out of them. That's not what they're trained for. Financial planners that are general financial planners from Raymond James or Edward Jones or some generic bank who doesn't understand the nuances of the cash flows in your practice, all they're going to do is say you need 8,000 a month to retire at 65, ready go, and they'll put you in some index funds. That's not what you need. That's not what you need. You need somebody who can understand the overall ecosystem of cash flow in your practice and out of your practice and how they merge together in a really unique way to reduce taxes and increase take home and really accelerate your finances. So that's why I call this the CFO model. And there's a few firms out there that do very intentional, proactive business and personal consulting around the doctor's money and everything around tax planning or when to buy the new dental chairs or when to build out another operatory or can you afford giving your office manager an $8 an hour raise or how are you benchmarking relative to your peers in the industry on your cost structure. All of those things are things that you really need to understand and know about to run a really good dental practice. And a CFO, somebody who brings it all together into one comprehensive analysis, just will make your life so much easier for you. And I really encourage you to seek that type of provider out. So, Howard, thanks again for having me on the show.
Yeah, I started the show with that. I mean, the biggest decision you're ever going to make is who you choose to be for your spouse. And the second one in dentistry is going to be who you choose to be your CPA and your lawyer. And if you get A's in all three of those people, spouse, CPA, and lawyer, you're a millionaire baller. I mean, it's hard to screw up if you got that advice. And then they always come back to you. They're so sweet. They go, "Oh, well, I asked the priest at Saint Margaret Immaculate Holy Mary Mother of God, and he said that John in our church was an accountant, and I chose him." It's like, oh God, and oh God. But hey,
Well, but even
great, great.
that, there's dental CPAs. I've heard this many times where a new client comes to me, and when they come to me, we have a full agenda of everything we're going to cover before they sit down. I already did my cash flow forecast. I already did my tax plan. I already have my initial set of recommendations, and then they sit down and they tell me everything going on, and then we come out of that with a set of action items. And there are dental CPAs where you'll go and you'll sit down. I don't mean to speak negatively, but you'll sit down and the dental CPA will say, "Okay, Dr. Farran, what do you want to talk about today?" And then the dentist is left trying to think, I don't know, what should I be focused on? So not only dental specific, I think that's half of it. The other half is, are they really proactive and meeting with you at least 3 times during the year? And they're dental specific. That's probably going to be your best option. That's my final
And,
word
hey,
there,
and
Howard.
okay, and if you ever get really bored, please write me an article on patient financing and credit card. You know, how do you pay for treatment and credit cards, all that stuff. They're obsessed with it on Dental Town. But so if you get
You got
really,
it.
really bored, think about that. Thanks for all you do, man.
Thank
All
you,
right, have
Howard.
a great day.
Take care.